Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we have Kristina Chang with us with Westlake Realty Group. And Kristina, it turns out, is the niece of Walter Chang, who I had worked with in the early 90s. So Kristina, it's great to have you on board. Just love to hear what Westlake is up to these days and where you're looking for properties and what you think the market might be right now.
So first of all, thanks so much for having me, Bruce. Really excited to chat. My uncle and my father worked in our business in the 70s, 80s, 90s, and 2000s, and I've kind of taken over the business over the last decade. And I came in to sort of institutionalize the business in terms of how we're running our existing properties, and expanding to new property groups and raising outside capital and functioning more like a private equity firm. So with our on-balance sheet portfolio, we've redeveloped some of the assets that have reached the end of their useful life in all asset classes. Office, notably our headquarter building, which we finished in March of 2020, which is just really, really fortuitous timing. And then a hotel in San Jose, right by the airport, also finished in mid 2020. And both of those assets are performing really well now. It was just kind of a hiccup getting them off the ground in the middle of COVID. And then multifamily assets in Santa Rosa and San Jose. We did those all on our balance sheet, and now we're getting ready to break ground on a 328 unit ground up project in Santa Clara, right by NVIDIA, right in Lawrence Expressway. And we'll start that. We'll break ground next month, and we're just finalizing all the contractor stuff and all the last loose ends before we start moving dirt around. And then additionally, my passion is sort of niche industrial. So we've played in self-storage. We bought 8 of those assets over the last few years. We're getting ready to sell the first ones. And about 2 years ago, we started looking into industrial outdoor storage. And we've got our first few deals under contract. Right now, we've been able to use AI to widen the deal flow pipeline and widen that funnel. So we find a lot of really good off-market deals in a way that would have been really challenging 10 or 20 years ago.
Well, that's interesting. So tell me, I'm not familiar with outdoor storage. What does that entail? Just dirt and then some fencing? How does that work?
So there's a few different categories of industrial outdoor storage, or IOS. But in its most basic definition, it's low coverage industrial. So anything 25% floor area ratio or less is considered IOS. So it's everything that has to do with trucking and logistics. So everything from it reaches the port, those shipping containers need to be stored somewhere, to those go on trucks. The trucks need to go places, and they need to park at certain intervals to let the drivers rest. And they need to go then obviously to kind of cross dock facilities where then goods get moved either from bulk to not or consolidated, et cetera. So that is probably like at least half of iOS. And then the other half is equipment rental, lay down yards, everything to do kind of like with servicing the utility grid. And just everything one step up on the supply chain for construction and real estate. So it's a place that we're really excited to play, and it's a diverse tenant base all the way from mom and pops to triple B credit household names.
So that's interesting. So when you're leasing to a container company, do they lease a part of the yard, or do they come in kind of on an hourly basis?
They'll lease part of the yard on a monthly basis. And so we don't do a ton of shipping containers. We don't play much in the port markets. We play more in kind of the infill West Coast markets like the Bay Area or Sacramento or San Diego, for example. But in those markets, people are leasing either by the stall or by the acre.
Oh, wow. Okay. So they can lease month to month if they want.
Sometimes they do. Most of the time, we try to move away from that. A lot of the stuff we're buying, we'll have month-to-month tenants, and then we'll put them on term leases at market.
So are you seeing a decline in shipping containers due to the tariffs, or what's happening out there?
We touch the iOS space that less has to do with the shipping containers. But that space has softened a little bit. We're much more in the kind of 5 to 20,000 square foot building with 2 to 6 acres of yard. And that tends to be like a contractor, the guy that fabricates windows, doors, piping, all that stuff. And we're seeing that it dipped a little bit. And the demand is kind of bounced back, and rents have sort of bounced back as well.
So I'm curious, when you go on AI, do you basically say, "Hey, we're looking for this size building with this much yard," and AI will generate names of owners in that category?
We're very submarket specific. So within like the category of Denver and West, we have about a dozen or so submarkets that we're most interested in. And in those markets, we flag the properties that fit our criteria from a zoning perspective, from a size perspective,
Oh,
and from a user perspective. It's like a non-institutional owner, and user. So and then we cold call on those. And so AI allows us to identify those in a way at scale. And part of what makes iOS so interesting is that the data is fragmented. For single family homes, for example, it's very clear what the price per foot is. All the comps are out there, all the information is public information. That is not the case in iOS. It comes from talking to local brokers and piecing that information together, to put together databases with lease comps and sales comps, which is especially difficult in non-disclosure states, a little bit easier in states where that information is publicly available.
do you use CoStar for gaining any market research?
Not really. I mean, a lot of like what creates the opportunity in iOS, is the fact that it's a fragmented market. And so this information isn't on CoStar, it's not on LoopNet. You have to go find the information yourself.
Yeah, and so that's where AI really becomes a big advantage, it sounds like. And then you have somebody basically calling people at intervals to try and see if they're interested in selling.
Exactly.
Wow. Okay, so that's very interesting. So let's going back to your residential development, the 320 units. How many affordable units did you have to build in that unit, in that project?
None. We got the project
None.
built several years ago, so we are grandfathered into being will be the
Oh,
last market rate project in the city of Santa Clara.
so you didn't use the state override in terms of, yeah, you were entitled previous to that time.
Yep.
Yeah, but you're finally coming out of the ground. Are interest rates on construction loans getting to the point where it makes sense?
Well, we took life insurance company money,
Uh,
and the partner is both our partner on the debt and the equity side. So the debt terms came in probably a little bit more favorable than market.
oh, that's interesting. Well, so are the investors starting to come out of the woodwork now, finally?
I think they are. It depends on the institution, but I think institutions are placing capital again. It just kind of depends on what their thesis is.
Everybody had so much cash sitting on the sidelines, but now it sounds like maybe they're starting to get into projects again.
Yeah, it'll be exciting to see what the development pipeline looks like for 26 and 27. But we feel like we're pretty early to getting the shovels in the ground, and there is going to be all that supply that hit the market's going to be absorbed by the time that we start leasing.
So when do you think you'll actually open the doors for that project? A year, maybe?
No, like probably like a little over 2 years.
Oh, wow. Okay. Yeah. So how many floors is that?
7. It's a podio wrap, so it's two separate structures.
Oh, okay. So you'll have a podium up to a certain level and then stick built above that.
Yeah.
Yeah. Well, that's the way to go, I think. And how many, you're pre uh, how many parking places do they require these days?
I don't have the exact number for
Right.
you, but it's a decent amount of parking.
Yeah. So, but did you go underground for parking or you're doing
No,
above ground? Yeah.
above ground, it's cheaper to do that.
But much cheaper. Yeah. Yeah. So what other projects is Westlake Realty working on?
Well, we're still in lease up on a ground up self-storage facility that we built in Sonoma. We had the opportunity to buy. We owned a small facility in Sonoma and had the opportunity to buy an entitled shovel-ready site next door to us and operate that as a single facility. And so we built 70,000 square feet of storage and opened that up last November. And we're leasing that up right now.
Oh, wow. Okay. So that sounds like a big project. Sounds like leasing's not going terribly quick there, but okay. Right.
Yeah, it's going pretty well. We're almost halfway to full occupancy, so I'd
Oh,
say
that,
that's pretty good for being open less than a year.
yeah. So are you out sort of aggressively looking for investors these days? You're not thinking about becoming a REIT, it doesn't sound like.
Now, what makes me really motivated and excited is having that direct contact with our investors and meeting new investors personally and having real people invested in our deals. And so it's a lot of family and friends and my greater network and always looking to connect with new investors. Being able to give investors solid returns with only one layer of fees, I think is something that is pretty appealing to retail investors.
Oh, I would think so. Well, if insurance companies are coming in, it sounds like your appeal is pretty good right now.
Trying to, we're building that track record.
Well, I mean, you've had a long track record prior to your even coming in. I mean, going back to your grandfather. I mean, when did he start Westlake?
1972.
Oh,
So
wow.
we're 53 years old right now. So
Yeah. And you've done a lot of things over those years for sure. Well, you have a hard stop and I have a hard stop. So just for fun, what's your favorite food or sandwich?
favorite food, sushi, favorite sandwich, turkey and Swiss.
Oh, wow. Okay.
Those are
And
good. Those are good. Those are good questions. I like them.
and who in the world, alive or maybe not so alive, would you love to sit and have some sushi with?
Oh, that's a great question. Um, I would love to have one last sushi lunch with my grandfather. That would be
Oh,
really.
I bet. I bet. So you obviously got a chance to meet with him way early on in your life.
Yeah, I started working at Westlake when I was 7. I just
Oh,
kind of
wow.
shadowed him in the summer times. And he was always a really great mentor and role model. So I just hope that I am carrying on his legacy the way that he would have wanted.
It sounds like you are. Definitely sounds like you are. So, well, congratulations on all your great projects, and I look forward to having some sushi with you at Sushi Sam's. We'll have to arrange that. Next
Definitely, definitely. Would love
next
that.
time you're up this way, let me know, and we'll make a reservation.
Will do. Thank you so much, Bruce, for having me. I love this conversation. Always great to connect with people who know my dad and my uncle.
We'll keep in touch. It's great to see. Say hello to Walter and your dad for me.
Will do. Thanks so much, Bruce.
Talk to you soon.
Thanks. Bye.
Bye.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.